Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the S&P 500 on a 4-hour chart, and the Fed's obviously going to print some money and buy bonds in the secondary market, and also hold rates until another year to 15. So we're seeing this market push up. We were tracking a fifth wave up through here. Obviously, in normal terms of Elliott, we wouldn't, expect it to extend like this. We would sort of expect it to be, into this area here. But because of that news, then obviously it's pushed up higher. That's okay though. So what we need to do now is we need to track this this wave 5 through here. And that's what we'll do. So we'll just stay on track with that. The obviously would count that as the third wave up there. So we've got a series of 1s and 2s in here. We'll have a look at that in a moment. But just in the bigger picture here, the midpoint here, support on the midpoint from 1400 to 1500 is the next level up, so to speak. I haven't put that in there just yet. There we go. Pop that in there. I'll just double click on that. I just change the colors like this. Then I just, do this. That's a medium level, so I'll put it a little bit thicker there. Obviously that's the resistance, but before we get there, there's this little resistance in here as well, and this is kind of where I was sort of expecting this little structure from here to here to finish in terms of the 1, the 2, the 3, the 4, and the 5, so to speak, and then we'll see it roll over from that point. However, once the market has tested the 1450 here as support, then we call in the next level, which is the 1500. So this is a bit of a sticking point here, but let's just see how it all travels from here. But let's just drill down into this little section here, just to unwind that a little bit. And look, that's it there really. It could be a bit of a hit and miss affair, but basically we've got up for wave 1 here, wave 2 here. Then the next degree smaller would be 5 waves, which would be the 1, the 2, the 3, the 4, and the 5 to make the wave 3 from here. Wave 2 to wave 3, then the wave 4 and the wave 5 to here. And that would give us the wave 5 of the next higher degree, which will complete that 5-wave structure. It's really been the last, this is QE3. I don't know if you can really even call it QE3. It was pretty small. It depends on how much money they're going to print, I guess, of what you can actually call it. But after each QE3, the market has been sold off. So we just need to be aware of that. So following this particular structure here, we need to be cautious of the market being sold off as it has done after QE1 and QE2, and there's QE3, and there'll probably be a whole set of QEs coming along over the next year or two, I guess. QE10 and like the Rocky films, so to speak. Yeah. But anyway, couple of points here that after the QEs, the market has been sold off, but we'll follow this little wave structure to the upside here and see how it pans out, but be aware of that. So what we need to do is we need to see the market settle. If this pans out through here, this final bit in through here, that should take the US markets. These 4s and 5s here will be a bit like these 1s and 2s here, so it won't be a big sort of move up here. But what it will do for the Australian market, at least, it will give us that positive close today on the Friday. Thursday in the weekly bullish cycle. Thursday's the bear day, but down on lower volume, and that was the case. So we expect Friday to be up. That will follow through to the Monday. Tuesday profit taking, Wednesday V-shaped day, and Wednesday can normally be the high in the market as well, followed by the bear day on the Thursday, which would coincide with this particular wave count that we've got here. The FTSE would be the same here, the DAX would be the same, the Australian market slightly different, but the FTSE, I'll just go to the Dow Jones as well. Beg your pardon. Let's just have a look here. So the Dow Jones is in much the same sort of shape as well. Oops, that's the S&P 500. So this is the Dow Jones here. So this is just the 1 hour chart here, so it's the same thing again. Really, this would be the wave 4 here, and we're looking for this to push higher through here. So really, in terms of the levels, we've got support on top of group 1, as we've been pointing out, gets you to the next level. Okay, now support on this level, the midpoint, the five here, 5 second strongest number. Once we get support on this, we need to expect an even swing across both sides or some type of corrective pattern through here. But if support is found, then we can look up to the next level, which would be, well, in this case, if support is found on here, I just naturally look up to the next level, which would be the 3.8 from here, but also the 13,000 to 14,000. This 13,500 is the halfway mark. So the 5 normally delivers a larger correction. So let's just see how we go here, because support on this just opens the target for 14,000. That's what it does. Of course, along the way, there's certain levels along the way that are going to be influenced by that as well. But let's just stay within this particular structure that we're looking at here, and also the levels as well. So we can expect this to, vibrate across here. But let's see, once it's said and done, if it finds support, then we'll be pushing to the upside. The European markets are pretty much the same. The FTSE here actually followed the S&P 500 this time, where the DAX didn't push up as much, so it was lagging and it pushed up because the FTSE has been following the S&P 500, but hasn't really been ranging out as much. But last night it did that, and as you know, this was the 5.8. The profit-taking number was the resistance, and the 5.772 is the number that would be focused on here within the Group 2 area here. So any move above the 72 and the 8.58 would be cause for going long at that stage there. So you can sort of see now that we're at 5.9 now. The wave structure up here would be up for 1 and back for 2 to here. So it'd be the top of a third wave up here unfolding through here. We need to take in consideration this move here. It's a little bit dodgy to work out, but it will just follow the S&P. So what we could expect here is a retracement back, maybe to the midpoint, but we'll see how it goes. But a correction back into here, so the arrival, the reaction, the support, and then creating the first high above the level, which should stay in Group 1 here, the 10, 20, and 30, and then we'll see a larger correction unfold across here. So basically down, up, down, up, down, and then we'll see how it sits on here if we're going to be going higher from that. And the DAX is pretty much the same as well in terms of at the 7,400 here. So I'll just bring that in a bit closer there. So it's got the arrival at this stage as well, and it will come back and it will do the same thing as well. So it's got the arrival, the reaction, then it will give the first high above the level, and then work across this level as well. And now that markets are not news driven, they'll take their own course. So profit taking is also on the cards as well. So I'll just reinforce that because we can get lost in the upside on things. So the Australian market, as mentioned yesterday, we were looking for support. The market was positive as long as it stays above Group 1 here. 4,300 is the top of minor Group 1, but we know that. But then we know that we had support in here at 43.30. So the market's basically positive from that. We were looking for a break to the upside. We knew there was resistance there. The meeting last night obviously pushed that through there. But look, once again, the same thing occurring once again. We'll see the arrival, the reaction, the checking for support in here, which it should do. The cash opening today should drift this back up and test these highs here. But even when this does move up through here, it's going to, the Group 1 here will slow it down through here as well. So we'll create the first high within here and then come back and checking it in here. But this does have the potential to move further up. To the 4,500. That's what we mentioned before, and the reason for that is because it's got support on here. All we wanted to see was basically a break higher through here. Yes, this could still be a B wave in here, but it's also got potential as an impulse wave up for 1 and back for 2, up for 1 and back for 2, to push higher up through here. Of course, if you're long above the 50 and long above the 72, then you just hold on this and allow this to find its feet here. And it's going to be very choppy and messy through here, but if you can hold through that, then we'll look for support on that, and then you can start adding to positions through here, moving further to the upside. Okay, so all markets pushed up. So let's have a look at the commodities. Starting with copper, and we can see the structure that we've been following here is basically wave 1, wave 2, and then 5 waves up here for the wave 3, and we're looking for a wave 4 to come into play, and then we're looking for wave 5 up. I also understand too that this could be the wave 3, 5 here as well. It's just a bit tricky to work out. But the main points here are that we are in a wave 5 moving to the upside. The other point is that in this area here we're in group 2. And so we've got 65, 72 and 80. Obviously there's a lot more numbers in there that have meaning as well, and that's what kind of makes it group 2 really, because there's 68 is an even number, 70, 75, 78 as well. So there's a lot of numbers in here, and when you're if you're trading stock, you don't kind of notice that much, but when you're in a market that has got a lot of space but distance between, we've got smaller price increments and creating more space, then all those numbers become more important. But in a simple, keeping it simple, that as always, if the 72 becomes the support, then we'll be seeing a move up to the 380 from that point there. And obviously this is going to be healthy for the materials sector, the BHPs, the Rios and so on. But all markets are positive at the moment, except not fully. Oil is pushed up as I thought it would here. There's also a chance that it can fail here, but as you can see here, if I can just clean this up a little bit here, don't need that anymore. It's developing. It's done all the right things. It's stayed above the 9650. And now it's developing support on top of subgroup 2 here, the 65, 72 and the 80. And you know that if support is found here, then we can be looking higher from that there. So just give that a little bit of time. Once it sits on 98 as well, then you can trade it long from that point. So yeah, so it's getting there. It just hasn't moved as much as some of the other markets have moved. The silver market is moving along quite nicely, and we'll hit the next level 35. It's also in smaller increments here. It's just not, it's operating in smaller increments. So when that's the case, then we really need to bring in the 34 here as well, because it's a Fibonacci number. So the 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, so on. So the 34 does come into play, and if you see it as $34 as well, it carries weight as well. So it's just in the backdrop a little bit more. But what's more important is finding support on top of Group 1, the 100, the 1, 2, and 3 here. And once that's the case, which you can see, it's found support here, and obviously it's pushed up with the printing of money, because the precious metals just love that, and obviously pushing up. So a little consolidation here within Group 2, 34, 65, 72 and the 80. Once that's completed, we'll see a push to the 35, where we'll see a larger correction unfold here as well, as it will in gold as well. The gold structure here, just starting to count this as more of a positive structure through here, but this will only really come into play once the 18 has support here. Support on the 18, then you can start looking at higher ground. Yes, the precious metals, they've got a tendency to extend in their fifth waves rather than in their third waves. So we'll keep that in mind as well, because that would take it to higher ground. Now, this number here is important, as you know, the 1772. So that's just going to give a lot of grief at this this high up here. So we'll see a reaction up then. So be mindful of 65, 72 and 80 through there, and also looking for support back on this 1750, the midpoint there, as a smaller wave 4 coming into play here. So yeah, just be aware of that there. So that's that. Let's have a look at currencies. Okay, starting with the US dollar here, and this is an 8-hour chart, just looking at the old high back up through here. And a couple of things here I wanted to point out is that the first thing that becomes really sort of obvious here is that as this market's been moving down through here, the speed of this has been picking up to the downside, isn't it? So it's in sort of full flight, if you will. So that. It's interesting seeing this. It's not that will continue, but it does sort of point out that when you're looking at things like this, you kind of look for the biggest fall, so to speak, and then you start looking at that being the centre of the structure, so to speak. So there is still more to unwind to the downside, and we've known that, and we'll be looking for the first sort of low to come into play around around this sort of area here. Yesterday we were looking for a wave 4 to come back through to here, a small wave 4, not on this big chart here, but on the smaller one, this one here. And I mentioned it coming back up. Well, the normal thing is the fourth wave of 1 lesser degree, but it didn't get back up above the 80, and it's just because it's headline driven, of course. So we're still looking for that to move down through here, but we do expect support to come in here into the 79 through here, and you'll be able to count 5 little wave structure through here. And the reason for that would be the euro finding resistance at 30 here. So 30 is important. 130 is important here, the 130, because it's a minor level, but it's also the top of minor group 1. So 110, 120, 130. And really what this is here, this is a retest of supply within the market. There's a little gap here too, by the way. So you can see that this is where all the selling took place. So it's where the supply is, where the volume is sitting. So that's where it's going to run into problems there. So the choppiness that it got created here, as this pushes up here to finish the A wave up here, that would be the same. It will have the same situation as well through here. So it's not like it's going to be running fast through here or anything. It's going to be very choppy, and this is what you would expect through this type of price action through here, but obviously reverse through here. So that's what we're sort of in for there. So do be aware of that, but should edge higher. So obviously this is the resistance, and we're going into a series of third and fourth and fifth waves through here. The fourth, that can come back up through here now a bit, and getting to here, if we break this down now into here a little bit through here, we can start to look at this a little bit further. So there'll be some sort of high here. We need to have a look at this little bit here. We can do that in a minute, but basically we're looking for wave 4 here. It made it a little bit sort of tricky through here, but I pulled that apart a bit, and we'll just label it up here, but we still expect another move up here further, but for wave 3, wave 4, which can also come back to the wave 4 here of 1 lesser degree. So that will depend on how it sort of reacts and sticks to the 130 there. So, but with the S&P 500 pushing higher, we kind of expect a smaller push, smaller, shallower retracement on its first move through here. So just breaking that little structure down in through here would be this little wave structure that we've been following all this week here. So this is from the 125 here, just to get bearings. So we're looking for wave 1 and wave 2. Then we're looking for wave 3 and wave 4. And then we've been looking at wave 5 to the upside. Now, I could also have this wrong here. It could also be counted here as well as up for 1 here, back for 2 here, and then up for 3 here, 4 here, and then 5 up to here. So that third wave could be this one here and this fourth one to here, and then would be finishing up here. But it still gives us the same count. It doesn't really affect it whichever way you count it. So the way I've counted it here is up for 1, back for 2, and then the third wave up to here with 5 waves in it, the 1, the 2, the 3, 4, and 5 to here, then the ABC for the fourth here, and then the fifth coming up through here on the 1 hour chart. But I still think there's more to go through here. It will just struggle through there. So if we break that down a little bit, this is kind of what we'd be seeing here as well. So from this last little bit here would be the 1, the 2, the 3, the fourth is coming. Obviously the market's into close, but we should see that move there push itself to the upside there, then that one to the downside, and then this other little one here, wherever it is. Anyway, you got the picture. Another move up to here and then down through here. So yeah, just basically working across here. So there's not going to be a lot more sort of upside to this. Yes, it will edge higher, but it's not the be end and end all. There's probably better moves on some of the crosses actually. The Australian market here. There's also a couple of ways to count this move up through here. So I think that I'll just leave the count for the time being. But what we can consider is first of all the 106 area up here is the old highs coming back over through here for wave D here. So there's going to be plenty of resistance up through there. And what that's going to do is that at some point up here, it's going to drive the price back into the 105 here. The 105, if we do get some swings across the 105 here, and then we find support, then that would be the buying time to trade much longer to the upside. So what we need to do is we can consider this the arrival, the reaction, the support, the first high above the level, and then the correction to unfold through here. So in finding this little 5 wave up through here, which would follow the S&P 500, so that should keep edging us a little bit higher. So on the 20-minute chart here, looking at this structure moving to the upside here, if the midpoint here, the 50, the 50 here finds support, then you can consider a new high being made through here, but finding resistance within group 2 there and pushing up into that 106 area there, where the resistance is going to start. Probably start before that, but from this high here all the way up to 106.30 is going to be a lot of pressure for this market, creating the first high above the level. So just breaking that little structure down through here, you can see that. Let's have a little look through here. So I suppose we need to take the count from there. So somewhere in here, the 1 and the 2 into here, so up for 1 and back for 2 into here. So we'd consider this the third wave unfolding in here, and this would be the fourth wave here. So it should find support on the 30-20 through here, and once it does that, we should see it climb back up here to finish that fifth wave up through here. But of course, it's in a corrective mode at the moment. You don't have a price point to work off, so you can't really do anything until you either got support onto the 50 here, or it drops down below here, and wherever if it drops below the 30 here and then finds back on support there, then you can go from that point. If it comes down here, bounces off here, goes through here, finds that and works down through here, then that would be the way forward. And if it found support back up onto the 20, then you can scale in from that point. Then that point trade up to this point, and then there'll be a reaction there again, of course, and it'll work its way across. So it's nice to allow it to spike down to test. It's a bit like this, a bit like any of this really. It's just like it's down and testing first. That's all trends are really. They move up and then they come back and checking demand all the time. So that's all the trend does. It's just testing. It moves up and tests. So you need to understand what price point you're working off, where the test is. So at the moment here, it's in sort of no man's land. So just allow it to be. But once the market opens, finding support on especially a nice number like 5 as well is a great point. It's a great point to work from. All right. Well, good morning, good luck, and have a great weekend. Cheers.